My name is Neil Slater and I'm the CEO of Redevco. So, of course, it depends on which jurisdiction and which sector you're in. But I would say broadly, there's been a lot of talk about opportunistic, but I see more opportunity right now in the value-add space. We're at a moment of time where we're waiting for core capital to still come back, some momentum to still come back into the asset class. But we're really focused on value-add and core plus opportunities in particular. So, first of all, you need to look at relative value of the asset class actually against other asset classes, because that plays a really important point. So, what's the opportunity cost of investing in real estate in the first place? And I think that's becoming more interesting than it has been over the last 3 or 4 years. So, first and foremost, that's having an impact on capital flows. And then, to get more specific to your question, when you start looking at the individual sectors, again, actually, it's a case of, I would say, relative value between the sectors, momentum, and thinking about both macroeconomically, where you are in different countries, but also thinking about the human element of these different sectors as well. So if you take office as an example, coming back to office post-COVID has been impacted differently in different jurisdictions. It's different in London than it is in Toronto. So what we do as an investor is we look across all these different ideas, concepts, different sectors. But what we're really focused on is relative value, momentum, and any particular trends that we think will be there for, say, the next 3 to 5 years. So I think there's 3 things to think about from the office perspective. Firstly, you're either going to focus on best in class, great sustainability, great locations, a great experience for people to work in that office. That costs a lot of money. There's not a lot of those assets, but if you can get them, you buy them, you hold them, or you sell them. Secondly, focus on mixed use. So focus on redeveloping assets to create something that actually has a better value outcome. So the income from that, it might not just be a classic office, there could be retail, there could be a hotel, maybe there's some residential, but that costs, to your point, it costs CapEx. So does that make sense? Can you afford it? And does it make your return hurdle? And then lastly, if you can't do any of those, maybe that suggests you've got assets in the wrong location, in which case I'd sell them and I'd move on and I'd look for other opportunities. So I think it's a really fascinating time for retail. It's gone through such a tough time. And it doesn't matter if you're in North America, Europe, even parts of Asia. You saw retail valuations fall off a cliff. You saw equity allocations to retail from institutions drop about 50% over a 10-year period. And suddenly you have this kind of floor in retail. And what certainly I've noticed is you're seeing some rental growth come through for the first time in many years. You're seeing demand coming back from occupiers, and you're definitely seeing capital flow coming in to the sector. I would say, however, you've got to be really selective. So we focus a lot on convenience, necessity, retail parks, community-focused centres. I think it's still quite challenging, even when yields are wide, for assets such as shopping centres, where there's a lot of potential CapEx. But in short, I think it's a really interesting time for retail, and it's been such a tough time for 10 years. So I think they are both really key. I think the sustainability aspect, particularly for a company like Redevco, is really important. Half of our balance sheet is focused on creating assets that are best in class when it comes to the carbon footprint, when it comes to the usability of those assets, when it comes to the energy usage of those assets. But of course, it's a bit of a movable feast with sustainability targets in the environment we're operating in. But from our perspective, we think it mitigates risk, and subject to the strategy you're running, it can be the right thing to make sure that you have a best-in-class approach there. I think innovation is actually super, super interesting, and it's something that this industry is not yet prepared for. So we've just taken a small investment in an agentic AI startup, which for a real estate company is so different, so unusual, but we're convinced that you're really going to see a significant pace of innovation in the industry over the course of the next 3 years. So I think watch this space for the industry.